Hi everyone, welcome to our webinar for today. We'll be starting shortly. Okay, I believe we can start right now. So hello everyone and welcome to our webinar for today on Singapore Withholding Tax Fundamentals, a practical guide. So my name is Patrick, and together with the Managing Director of Acclime Singapore, Mr. Thomas Chan, he will be your presenters for today. So without further ado, I'll pass on to the floor to Thomas to introduce himself. All right, over to you, Thomas.
Good afternoon, everyone.
Apologies, just give us a couple of minutes. We have a bit of technical issue over here.
Good afternoon, everyone. Apologies for the slight technical issue. Good afternoon, clients, friends, ladies and gentlemen. My name is Thomas. I'm the Managing Director for Acclime Singapore. Before my return to Singapore, I was operating a Big Four firm in Myanmar. I've been advising many of our MNC clients entering into Myanmar as well as across the region. So today, I thought that it'd be very useful for us to share a little bit around one of the key issues when considering investing into Asia. But before we move into the presentation proper, I'll give Patrick a chance to introduce himself.
Thank you, Thomas. Allow me to introduce myself. So my name is Patrick. I'm actually the tax manager over here in Acclime Singapore. So I have well over 10 years of experience including doing a tax practical research and editorial in areas of corporate tax, individual tax, and also on corporate tax. So prior to joining the Acclime, I worked in Big Four accounting firms before, and also I worked in a major pharmaceutical company focusing on doing Singapore and Vietnamese tax as well. So I also previously attached with an International Bureau of Fiscal Documentation, where I actually focus doing on tax research, report writing, and covering various topics such as like base erosion and profit shifting, tax treaties, and also on a cross-border taxation. And then to begin our webinar for today, I'll pass on the floor to Mr. Thomas to give a brief introduction to Acclime.
Thanks, Patrick. Let me just introduce everyone to Acclime. So Acclime has come together as a firm, and we have been expanding very, very rapidly over the last few years. I think we will probably need to update this very soon as we have brought more firms within the network. But in a nutshell, Acclime is a corporate services provider that is very focused in Asia. We are growing extremely quickly. We now already have 11 jurisdictions with 20 local Acclime offices, of course, with multiple offices in some of our key jurisdictions. We have coverage in terms of most of Southeast Asia, with the exception of Myanmar. And aside from that, we've got colleagues in India, Hong Kong, China, Australia, Seychelles, and New Zealand, as well as an office in Mauritius. We provide most of the corporate services that you can think of, with the exception of audit. So if you need us or assistance in terms of establishing your entity in Asia, we can help you take care of that. We also assist many of our clients in terms of their corporate secretarial, accounting, tax work. Some of our clients use us prior to their entry into Asia for market entry studies. And therefore, we have our key offices in Hong Kong and Singapore, as most of our clients would enter into Asia with an investment holding structure in either Hong Kong or Singapore. So many of our clients, as you can imagine, are regional, and many of them would actually need us to firstly establish their holding entities in Singapore and Hong Kong, and then subsequently ensure that they have a smooth entry into the key markets like Indonesia, Vietnam, Cambodia, Philippines, as well as China. We have a Western management in most of our jurisdictions. We're very focused in terms of our advisory capabilities, which are provided in-house. And we make sure that as we assist our clients in terms of their cross-border requirements, we are there every step of the way. So why are we here today? Singapore is one of the key holding jurisdictions within Asia. Many of our clients approaching us, of course, have an intention not just to invest into Singapore, but really expand their footprint into Southeast Asia, and in some cases beyond Southeast Asia into the rest of Asia. So why Singapore? Singapore has got a stable and secure political environment in this day and age. That's one of the key considerations for any board that is considering their expansion. Secondly, Singapore has got a strong financial infrastructure and connectivity. Many of our clients have got a broad variety of needs in terms of their financial planning, as well as cash management and many other financial requirements. And therefore, Singapore's strong banking facilities, as well as the broad array of foreign banks that are present in Singapore, are more than able to actually cater to the needs of many of our clients. Singapore also has a comprehensive intellectual property network framework. As many of our clients look to establish their intellectual property in Singapore and protect that intellectual property, this legal framework really helps them drive that decision process. Many of you are also aware that Singapore is getting far ahead in terms of its fund and wealth management capabilities, and we continue to invest and grow in that space. Singapore, of course, has a well-educated and skilled talent pool. But last but not least, many of the investors choose Singapore as a holding jurisdiction because of its transparent tax systems, policies, broad range of tax incentives, as well as a large number of tax treaties that are available. But in considering using Singapore because of some of the tax facilities and policies that are available, one of the key points that our clients will need to understand is how the broad treaty network, as well as the Singapore sort of a tax framework, works together in terms of the withholding taxes, which is one of the key costs, shall we say, when clients are considering repatriating their income into a Singapore holding structure. Given the time limitation today, we will not touch on the withholding taxes across the entire region, but primarily focus on Singapore, and hope that that would give you a flavor in terms of the issues that you would need to manage from a tax perspective when deciding to use Singapore as your springboard into the rest of Asia. Subsequent to that, if you are in need of more detailed analysis, We welcome you to approach us, drop us an email, which would be shared later. We would be more than happy to arrange for a discussion. Meanwhile, throughout Patrick's presentation, should you have more questions, please feel free to type that into the Q&A box. We will try our best to address many of them, and where it's a little bit more detailed, we'll be happy to arrange for a separate session to have a discussion or a coffee at our office, and we can discuss that in greater detail. So without further ado, let me pass it back to Patrick so that he can take us forward in the discussion. Patrick, please.
Thank you, Thomas, for a brief introduction. Okay, just a minute. Okay, so our key agenda for today is, so I'm just going to talk about withholding tax. What is it? Payments that are actually subject to withholding tax in Singapore, the most general ones, and also tax treaty considerations, filing and paying the withholding tax here in Singapore, the penalties, and other points to take note when it comes to withholding tax. And of course, at the end of the session, we'll have the Q&A session. So withholding tax, what is it? So withholding tax is actually a tax collection mechanism whereby the payer in Singapore of a tax resident country must withhold a certain percentage of the payment when making the payment to the non-resident recipient. So thereafter, the payer is actually required to remit the amount withheld to the relevant tax authority. In this case, for Singapore, it's the Inland Revenue Authority of Singapore. And it is only actually applicable for a certain type of income that is sourced or even deemed sourced in Singapore. But bear in mind that withholding tax is a collection mechanism. It's not a new type of tax. So the onus to withhold the withholding tax is solely lies on the payer itself. So what are the payments that are subject to withholding tax in Singapore? So the most common ones are the interest payments, royalty fees, technical management and service fee, rental or payment for the use of movable properties. Of course, there are a lot more things like distribution from REITs, payment to non-resident directors, to professionals or public entertainers. This type of income we won't be focusing for in this webinar. We're just going to merely focus on these four types of income over here. So to start off, interest payments. So interest payments are the type of payment that are subject to withholding tax, which is like interest on loans. And this will be on like borrowings, like you have an intercompany loan when you're actually paying an interest for them. And then there will be some, when the payment is made out of from Singapore, you will be subject to withholding tax. Overdue trade accounts and interest on credit terms provided by supplier. And one more thing is to take note is the tax, withholding tax is also applies even if the interest is treated as part of the seller's trade income. Example, like interest charge on late payment of the sale of good or price. For the sale price of the goods. And then also on a commission in connection with loan or indebtedness, and also on guarantee fees as well. And then, but bear in mind that withholding tax is not applicable for loan obtained from outside of Singapore for acquiring an overseas immovable properties. That is one. And payment made to a Singapore branch of a non-resident company. And then if there's any guarantee fees where the guarantor is a non-resident and giving of the guarantee is not effectively connected to any business carried out by the guarantor in Singapore or any permanent establishment in Singapore. So that is on interest payments. Next is I'll be touching on royalty fees. So what are royalty fees? So royalty fees are basically payment for the use of or the right to use an intellectual property. So royalty generally regarded as a payment in consideration of the intellectual properties like patents, trademarks, designs, models, plans, or other types of intellectual properties. So it can be either like a periodic payment, which is subject to withholding tax, or a lump sum making of the royalties as well. which I'll go into greater detail later. I mean, the thing about royalty payments over here, it is not defined in the Income Tax Act in Singapore, but how IRS justifies this is to categorize in two types of payment. One is a know-how, and the other one is a show-how. So why does it matter? It's because for royalty fees, that is, it will be considered as a know-how payment, the withholding tax rate will be different compared to show-how. Show-how will actually fall under as a technical service fees, which I will explain later. So know-how payment, what is it? It's actually for the use of or the right to use and scientific, technical, industrial, or commercial knowledge or an information. So royalty under softwares, this is one of the many questions a lot of corporates around the world, they would like to know about this. So for softwares, in order to fall under the category of royalty and therefore subject to withholding tax, IRS actually have come up in two types of categories. It's either as a copyright right or even a copyrighted article. So how IRS define this is based on the right-based approach, which is under the copyright right, the user will be able to commercially exploit, which they're able to reproduce, modify, or adapt and distribute the said the said software, and also prepare a derivative work. And then, which means the copyright is where there is a partial transfer of right permitting the payer to commercially exploit the rights. Next is on copyrighted article. Copyrighted article is simply means you have the right to use for personal or even for business. So like an example, under the copyright right, it's let's say a supplier, they bought a software and then they're able to reproduce it. Let's say they got themselves the right, they're able to make a copy out of it and sell it to the end user. That will fall under the category of copyright right, and then therefore we be subject to withholding tax. Or even like a specialized software, like example for SAP. Some companies for SAP, they will actually have a special function or special way of using it. So this type of payments will fall under the category of copyright right. Copyrighted article, on the other hand, example, you're subscribed to Bloomberg or Wall Street Journal, and for you to read the articles over there, or even you acquired a software like Photoshop, for example, and then it's for you to use in your business to come up with your photo editing works, for example, and that will fall under the copyrighted article. So the clear distinction is, it's copyrighted article is pretty much on a personal level use, whereas copyright right, you actually, the keyword over here is you're able to commercially exploit. So here's a few examples. So if let's say a company makes a payment to a software developer for the right to adapt or modify the source code, this will fall under the category of copyright rights. And like as I mentioned before in my example, so the payment to software developer for the right to use photo editing software in his business will fall under the copyrighted article. And then a payment by retailer to a software developer for 100 copies, like I mentioned earlier, there's no rights given to reproduce the software, and for sale to the end users, this will fall under the copyrighted article. So the keyword here is they can't actually produce the software. They buy 1,000 software, they're only able to sell 1,000 software. All right. So next is I'll be focusing one of the very common payments that be subject to withholding tax over here, which is on a technical, management, and service fees. So payment of the rendering or assistance of service in connection with the application of the use of scientific, technical, industrial, or commercial knowledge or information would be subject to withholding tax under the category of technical service fee. So some of the examples are actually the installation of equipment, technical support service, you conduct a consultancy or even a training over here. So the difference between a royalty and technical service fee over here is under the royalty category is pretty much an intangible service you're actually looking at. Whereas the technical service point of view, it's more of this a manual labor come into hand. So over here, IRS made it very clear, very straightforward. So it's only attributed to the work done in Singapore. So let's say if there's some work performed via electronic means, example, you're doing by internet, email, or via remotely, without your vendor sending the staff over here to Singapore to perform the work, it will be considered as a services performed outside of Singapore. Hence, there won't be any withholding tax for this. So this is where IRS put it as a show-how approach. So on royalty, it will be know-how approach. Another example is quite common that the businesses over here they usually see is if, let's say, the payer in Singapore pays for the monthly allowance for non-resident company employees who are sent over here in Singapore, and the withholding tax will be applicable on the allowance that is being paid. I mean, it's not just the fees. We are paying allowance for a foreign company, non-resident staff that are coming over here, then a withholding tax will be applicable for that. Next is on management fees. So management fee is pretty much the management of or assistant or management of any trade, business, or profession. So this is quite common when you see between related companies, whereas they probably have a sales office here in Singapore, and then they will actually have a shared services, let's say, for example, in Malaysia. And then usually it's to be considered as a routine support service, which is example like accounting services, computer support, payroll, legal, training and development, etc. And then for services that is being performed here would be subject to withholding tax. Next is I'll be looking at on rental or payment for the use of mobile properties. So this is basically the property that is mobile. So it actually applies to charter of aircraft, rental of furniture or equipment, payment for the use of cars, handphone or laptops. And it does not include like real properties, like example, like buildings, and item that's like incidental to overseas business trip. I mean, like what it means. So if let's say, example, like a purchasing manager in let's say in Singapore goes over to Malaysia and rents a car over there for business traveling purpose and paid to a Malaysian car rental company, for this, there will be no withholding tax as the rental payment is not considered deemed to be derived from Singapore. And then another example is, let's say a Singapore company like doing some construction over here, they actually lease a special equipment, let's say from an overseas company, let's say from US, and then to be used in Singapore. For that kind of rental being paid will be subject to withholding tax. So this is the clear distinction over here. It's where is the mobile properties that is being used. So if it's being used in Singapore, then it will be subject to withholding tax because it is considered as derived from Singapore. So to sum things up, this will be the domestic rules, domestic rate for the types of withholding tax I mentioned earlier. Like a dividend, it's there's no withholding tax for dividend that is paid out from a Singapore company. For interest, it will be 15%. For royalty, it will be 10%, whereas for technical services fee will be at 17%. So this is, like I mentioned earlier, the distinction between a know-how and then a show-how approach. How do you actually look at it? And also like management services fee will be at 17%. The rent for the use of mobile properties will be at 15%. So tax treaty considerations. So where does a tax treaties comes in? So tax treaties are basically an agreement that is between two countries in order to reduce or eliminate double taxation on the same income. So first thing to look at is whether is DTA, is it relevant? I mean, where is your vendor is coming from? Is it a tax resident in a foreign jurisdiction? And was there any DTA between Singapore and the resident country of the vendor? So if there is, so withholding tax, I mean, in the DTA itself, there'll be actually list down the specific types of payment that are actually eligible for a reduced rate or even a exempt for the whole payment that is being paid. Like there are specific articles, example for interest payments, royalties, dividends, and also like technical fees in a certain types of DTAs with Singapore with other country. So like why I specifically highlight technical fees over here is because like in most DTAs, the royalty and technical fees are actually categorized as one. But if you're looking at the DTA between Singapore and Malaysia, there'll be a specific article on royalty and another specific one for technical fees. And the both reduced rate will be different. And then the next thing to know is the DTA provisions, it always prevails the domestic law. Like for example, it's for technical fees over here in Singapore, it's at the prevailing corporate tax rate, which is 17%. But let's say the DTA between Singapore and Malaysia, I mean the reduced rate for technical fees is 8%. So you need to apply 8% instead of the 17%. But however, if the domestic rate, withholding tax rate is lower than the treaty rate, then the domestic tax rate will apply. And then our next topic I'll be looking at, speaking on will be on filing and paying of the withholding tax. So how do you file withholding tax? So it's actually filed by e-filing, by electronic means via my tax portal. And then the form that is to be filed will be IR 37. So the filing deadline for this is on the 15th of the second month following the date of payment to the non-resident. So example, if let's say you have a payment to be made, let's say you made it on 1st July. So the due date for the company to file the form IR 37 or withholding tax will be before 15 September. So it's the 15th of the second month on the day you actually made the payment. And even if you make the payment on 31st July, the same due date will fall under the 15th of September. So again, 15th of the second month of the following of the date of payment. But let's say in other cases, excuse me, certain type of a payment that actually will be exempt, for example. So for this kind of cases where there's no payment that is remitted to the Inland Revenue Authority of Singapore, so you still have to file, but you only need to consolidate and e-file the IR 37 twice a year, either by 15th of June and also by 15th of December of each year. And in the case where you're actually claiming the rate under the double tax agreements, you will need to submit the certificate of residency by 31st March of the following year or within 3 months, within 3 months of submission. So why is there a difference over here? It's the one for by 31st March in the following year is meant for the current period, whereas for the 3 months from day of submission, if the claim for double tax relief is meant for preceding years. Next is we'll be looking at on penalties. So what will happen if withholding tax is not paid or being paid late? So the following penalties will be imposed. So 5% on the amount of withholding tax if you're already past 15th of the second month. And then after 30 days, there'll be an additional 1% of penalty for each completed month. So maximum, you can go up to 15 months or 15%. But let's say even after the 15 month, there's no withholding tax that is being paid, the Inland Revenue Authority of Singapore, or IRAS, may appoint agents like banks, tenants, lawyers, or third party to recover the overdue tax owing. So that's pretty much on penalties. So other points to consider. So when drafting contracts, I mean, like example, when you have a royalty payments or like interest, I mean, loan agreements, or even on technical fees, most of the companies, I mean, they will have an agreement, even to intercompany as well. And then when drafting the contract, it's always important to, I mean, you can state like who is going to bear the tax. So in most cases, if the contract is silent, I mean, the agreement is silent, it's the payee who actually bond the tax. So what it means over here? So let's say me as a Singapore company, I engage a company in Malaysia, and then I engage a service for some technical fees, for example. Let's say the total value of the contract that I need to pay is 100,000. And then the withholding tax is, let's give a simple example, let's say it's 10%. So what I need to do as a tax resident in Singapore is I'll withhold the 10%, which is $10,000. I'll actually remit to the Inland Revenue Authority of Singapore. And then the balance 90,000, I'll actually pay my vendor in Malaysia. So this is what it meant by the tax is being borne by the payee. But if the tax is being borne by the payer, which is myself, I'll actually do a gross up, and then I'll pay the 10,000 to IRAS, and then I'll remit the full amount of 100,000 to my vendor in Singapore. So these are some of the points you actually can make it clear when drafting the contract. So who will be liable for the tax? And then next is, when does the liability to pay the pay your non-resident arise? So these are some of the things that, example, like intercompany, what they can do is, I mean, when do they want to pay? I mean, like if they have like cash flow issues, I mean, you want to manage the cash flow, and then in the contract itself, how you want to word it, any specific date based on the agreement, or any invoices they want to be issued. Let's say it happens more between like intercompany transactions. And then what you need to know is what will be the amount of withholding tax due. This will be more common is like previously I touched on know-how and show-how. So you need to know what are the applicable tax, I mean, what the category of the transaction will fall under. This is very much applicable, for example, like there's a software contract. How do you want to do it? Because a certain types of vendors, like example, when you engage them, they will come in as two elements, which is the right to use the software, and probably the software vendor actually send over some technical stuff over here to come and set up the whole system for you. So over here, this is what we call the mix of payments. So the mix of payments is like the example I given. So there will be a different withholding tax rate will be involved. So when drafting a contract, it's also, this is one point that a company should be looking out for. And then that they should segregate between the different type of payment that has a varying tax implications. So here's a quick overview. So in Singapore, the payment that are subject to withholding tax, it's on interest, royalty, service management fee, rental of mobile properties, and of course there are quite a lot of others one as well. Payment to whom it attract withholding tax is basically for the non-Singapore residents. It can be corporates or even individuals. And then the method of filing withholding tax will be by electronic means, which is the form IR37. So when to remit will be by 15 of the second month of following the date of payment, or if let's say the payment that it is exempt is by 15 June or by 15 December each year. So just to recap, the rate for dividends There's no withholding tax on it. Interest will be 15%, royalty will be 10%, technical and management fee will be 17%, rental of mobile properties will be 15%. So we pretty much have come to the end of the session today. So now we are taking over the questions. So feel free to send in your questions in our chat box or even on the Q&A session, Q&A box over here. So we'll be happy to address. For final words, I'll hand over the floor to Mr. Thomas.
Thank you, Patrick, for that very informative sharing session. We will now move into the Q&A. We've received several questions privately as well as in our Q&A box. I'll try to address as many of them as possible. Should there be some that I'm unable to address in time, we do seek your understanding, and feel free to drop us an email and we'll be happy to respond to them in a meeting or a phone call. So I think perhaps the first one, I think there's one that was submitted in relation to, for a Singapore resident who is on a consultant agreement with a company, is the payer required to withhold tax from them? So by and large, if you recall Patrick's sharing session, withholding tax is typically applicable when you are making a payment to a non-resident. What does that mean? Us as a PE or a Singapore resident entity, and making payment to a non-resident, that's when you have a requirement to withhold. So when the recipient is also a Singapore resident, whether they file their taxes correctly or not is not an issue for you. You are not required generally to withhold on a Singapore resident when you're making another payment. Let's say you are a Singapore company, you're making a payment to another Singapore company. Generally speaking, there should not be a withholding tax that is applicable. Okay, so that's really the underpinning. Privately, there's another email. Oh, also in relation to fees. Is withholding tax applicable for advisory fees paid by a Singapore company to an offshore company for a project carried outside? Generally speaking, if the work is actually carried on outside of Singapore, you do not have an obligation to withhold. But of course, if there is work and that is carried out in Singapore, there are additional considerations. For example, is there a DTA between Singapore and the recipient country, right? How does that mitigate the need to undertake that withholding? So that's something in which we need to account for in order to make sure that we arrive at the correct amount to withhold, if any. Okay. Oh, wow. We've had a few more questions. Jit has mentioned, does the non-resident company need to file its corporate tax return in Singapore on the basis that it has suffered withholding? I think that's probably the gist of the question. Generally speaking, the obligation to withhold, as Patrick has shared, is on the payer. Now, that does not impinge on whether the recipient has a need to file a return. That's a separate set of considerations. So for example, if the recipient has got a PE in Singapore, then yes, it's got its own obligations to file a return. Whether the company, let's say, voluntarily would like to file a return, perhaps to claim back some of the withholding taxes, as well as some of the expenses incurred to earn that income, then there is a separate set of considerations to say, okay, is the withholding tax suffered a final tax? Okay, so that part of the topic would require a lot more time. So do send in, if you've got more specific scenario, and we'll be happy to have that discussion and answer them accordingly. Okay. We've had a few more questions. Let me get to them. Is transfer pricing subject to withholding tax? Now, transfer pricing is primarily just a concept to say that whenever you are dealing with related parties, it is expected that the price in which you transact with your related party is at arm's length. Arm's length means it's the same sort of price that you would offer to your normal customer, even if it's not a related party. So I would not think that, that would be a determining factor whether it's subject to withholding tax or not. It really depends on whether you are paying for some payment that is subject to withholding tax. For example, one common related party transaction which is subject to withholding tax is royalties. Let's say I use a brand name of my headquarters, and then when I make that, and then subsequently there would be a withholding tax that is applicable. Now, if I'm buying some product from my manufacturing plant in Indonesia or in Malaysia, that payment is for a product that's not subject to withholding tax, but that is likely to be subject to transfer pricing because it is a transaction between two related parties. I hope that makes it clear for them. Another anonymous question. We are making payment for publisher management fee all over the world. Would withholding tax be applicable? I think that really depends on the specifics around this particular fee. It's not clear to me what that relates to. It could be a management fee, it could be a royalty. I think the devil is always in the details. We would need to sort of examine the agreement between the parties in order to understand if that is actually a payment that is subject to withholding tax. So normally, when we go through a withholding tax advisory exercise, one of the key things, as Patrick has already shared, is for us to really look into the agreement between the two parties, right? Be it related party or unrelated party, that's something in which we would need to make sure that we examine in detail so that effectively we understand the real nature of the payment, not just whatever you call it, right? It needs to be congruent with what actually is being provided. Is it an intellectual property? Is it a product? Is it a service? In order for us to arrive at the correct withholding tax treatment from a Singapore tax perspective. Then subsequent to that, we think about whether, okay, is there a DTA between Singapore and the other country? And then whether, the parties are tax resident there in order to be able to claim the treaty benefits, as Patrick has shared. Okay, we have one more question. Wow. Can you explain briefly on the withholding tax for payment to non-resident directors? Will the payroll of non-resident directors? That's got several different layers of questions that is sort of roped into one. Really, primarily speaking, you need to understand what exactly is being provided. Is it really in relation to directors' fees? Or is that a remuneration for an executive director? Because just because they are non-resident does not automatically mean that they are not on your payroll. So when you rope in payroll and directors, they are actually very they may be a director, but at the same time, they may also be an employee. So what you are providing remuneration on is very important to discern in order to arrive at whether it should be or should not be subject to withholding tax. Now, aside from that, whether that person or individual is subject to not just withholding taxes, but an obligation to file a personal income tax return. Now, I'm assuming this is an individual, not a corporate director, yeah? If it's an actual individual, then there is a separate set of considerations in terms of whether they would need to file a personal income tax return in Singapore, right? How long are they present in Singapore? If they're a tax resident of another country, are they going to have protection under the treaty between Singapore and the other country, Okay, so there are several considerations. Number one, who is the individual and where that person is resident for? Number two, what sort of a role? Is it an employee role or the director's role that you are providing compensation for? It can be two separate payments, right? You're not restricted in that. You just got to make sure that it's very clear what part is for the director's fee, what part is for them executing work as an employee rather than a director. Okay. Another question is, does Singapore provide certificates for withholding tax to non-residents? Yes, typically we do have returns which can be provided, as Patrick has shared. So that's something in which can be shared with recipients. Now, in terms of claiming foreign tax credit, now each country has got different requirements when the recipient is claiming foreign tax credit. For example, some countries request when payments are being received in Singapore, that Singapore provides a certificate of residency. Now, IRAS does have a process which is very, very much automated. And there's a list of questions in which you need to fulfill before IRAS grants you that certificate of residency. In other countries, it is a more long drawn out affair. So it really depends on the countries where you require that certificate of residency. Now, keep in mind, not both parties are needed to provide a certificate of residency. Typically speaking, under the DTA, it would be the recipient of the payment, right, that is claiming treaty benefits that would need to provide that certificate of residency. So again, if you cannot remember who has got the obligation to, under a DTA to provide a COR, just remember the recipient, the one that is benefiting from a lower tax or lower withholding tax rate. More work is required out of them. And therefore, it would be the recipient, and the recipient will need to go to their tax authority to request for a certificate of residency. Okay. Right, we are almost out of time. Okay, I think that's probably all the time we have for today. I would like to thank everyone for attending today's seminar, and I hope we have addressed all of your questions. If we have not, please feel free to drop us a note. Subsequent to this, we will be sending our emails in the chat box so that you can share your questions with us. We will be putting Patrick as well as my email addresses, so you can drop us a note, and we will be happy to get our team to arrange for a session with us in the office so that we can have a more detailed discussion, and whether we can help with some of your tax issues that needs to be managed. Okay, again, thank you very much for spending time with us this afternoon. We look forward to seeing you in our future webinars, and perhaps if we start having physical seminars as well, we can welcome you in our office at Hong Leong Building. Okay, all right, Patrick has shared our email addresses. We will leave this on, but I will sign off here and see you again soon. Bye-bye.